The stock market is crashing. Why is it crashing? Now, I think most of us know intuitively, and from what we're getting rammed down our throats from the media, that it is due to the imposition of the trade tariffs, or the tariff war that they so aptly get across. And so today I'm going to run you through quickly why the stock market is actually crashing, and how that relates to tariffs and the imposition of this tariff war that we're seeing play out currently. So I'm going to explain this really simply, and it starts with America's trade deficit. So currently, America spends far less than it earns. So we can relate this to a household. Let's say a household earns $100, but they spend $200. Now, it doesn't take you long to understand that that can't exist for very long. And it's a similar scenario with America. So America is in a trade deficit, the largest in the world, of $1 trillion per year. So they're losing essentially $1 trillion a year of their wealth from America back out into the globe. Spending $1 trillion each and every year makes them the world's biggest customer, for this analogy. So imagine you have a customer and you raise the price of the thing that they buy. Then logic dictates that they can only buy less of that thing because you've increased the price, assuming that they haven't increased their purchasing power. So if this customer can purchase less, then that means the companies that are supplying to this company will be selling less. And so because they're selling less, then investors quite aptly note that the company's value would therefore drop because its output would reduce. So you may be wondering, well, if that's the case, why aren't American shares going up? Because what happens during a trade war is the home country tends to purchase more goods locally instead of overseas, because the overseas goods become less competitive. So why then aren't American companies going up in value and the rest of the world's companies going down in value in relation? And there's a very simple fact for that. Because of globalization and the increase of globalization, American companies also rely on companies around the world for their inputs to create their products, to create their services. Now, what this looks like is if a American company sells vehicles, for example, they would probably rely on their steel from one country, their rubber from one country, their electronics from another country, etc., etc. So, their services as well. There may be call centers set up for certain services within America, but their call centers may be set up in Asia or Europe or wherever. And so all the inputs that go into providing that good or that service are increased, and so that service or good must increase as well to account for that increase. And that's why not only are overseas companies going down in value, but also we're seeing the American companies go down in value too, because this impacts everybody. And that's why we're seeing some turmoil across global stock markets and not just overseas stock markets, not including America. And so that's a quick wrap up. Thanks for stopping by again for Money Media. Really important to subscribe, and the reason for that is because we're often adding really time-sensitive content on Money Media. And so if you subscribe, YouTube will notify you, let you know when we've uploaded our next video, and so you won't have to be constantly refreshing to see what's new. Subscribe. Thanks for stopping by, and I'll see you on the next video.